Joining me right now here in San Francisco is Titus Wealth Management President and Founder, Eric Aanes. Eric, it's good to see you. Thank you so much for being here.
Thanks, Maria.
So what would you attribute this sell-off to at this point?
So, look, when we look at the market, we look at it in a few different ways. We look at earnings, interest rates, and China. And certainly the earnings are looking good for the companies. I think 80% or so of the companies that have reported have looked good. This is really a short-term blip. What we're seeing is some knee-jerk reaction from interest rates, China, and certainly what's happening over in Turkey is not helping the situation.
But do you worry? I mean, do you want to change your strategy given the fact that interest rates are where they are? That you can get almost 3% in the 2-year note, for example?
You know, that's a great question. When you look at the 2-year, it's at 2.90. The 10-year is at 3.20. And the question is, the big question mark is, are we going to see 4 interest rate increases? Are we going to see one follow through in December and 3 more? So the question you want to ask yourself, do you want to get ahead of the curve or not? And so for us, we're starting to think that bonds are starting to look attractive because the yields have come up so far so fast.
So you would sell some equities and go into bonds?
We're starting to look at that. We may think it's a little bit early. It's we've been talking a lot about being in the 8th inning of this rally. Maybe we're in the beginning stages of this bond market that's going to kind of turn back into a rally, and you can see that in some muni yields and corporate yields really hitting 4.5% level.
So Dagan, jump in here, because we know that the market likes to anticipate what is to come, and there's been this narrative that we've spoken about so much that things will slow down come 2019 and going into 2020.
Not at not at where interest rates are right now. I think a lot of it is just nervousness, and frankly, people are grasping for a reason to sell at this point. They're nervous about the Federal Reserve overreacting. The president has really taken kind of a hammer to the Federal Reserve in terms of being upset with their monetary policy and their aggressiveness. But it's a worry that the Federal Reserve will go too far, because I know that James can weigh in on this. Historically, the Fed has gone too far, and actually it caused many of these financial crises that we look back over the last, James, like almost 100 years.
Yeah, the history is not encouraging. Thanks. I happen to think the Fed is on the right track here with rates, but yeah, the Fed's fingerprints are all over basically the greatest, many of the greatest financial calamities in our history, whether it's restricting the flow of credit, restricting the money supply in the 1930s, or their loose monetary policy in the mid-2000s, running negative rates for a while, negative real rates that helped create the housing bubble and then eventually bust. So I think the president is right to be concerned about the Fed and investors too.
Well, and also what we saw last week was a real coupling of interest rate prices going down and stock prices going down. What we've seen is the NASDAQ's had a sell-off of maybe close to 9%, 10%, and people are really looking for what we thought was a safe haven, but last week wasn't happening. Now we're starting to see some of that play out, where there's getting some level ground here, where folks are really taking a deeper dive back into, well, do I need to get some more into fixed income? And so that's what we're seeing, is that, yes, we do see some more opportunity and growth. We also see it in some of these larger value names, and some of those may come through even today. Some of these great dividend-paying companies that are going to report may have some great earnings, and they really never got that Trump bump to begin with. So there may be some room in some of those more larger defensive names, and also to rotate a little bit into bonds moving forward.
You might still see the Trump bump, because the president is announcing a new 10% tax cut for the middle class. This is what he talked about yesterday on the campaign trail. The president using it to help underscore the need to get out and vote in the upcoming midterms. Watch.
Republicans passed the biggest tax cut and reform in history, with massive tax cuts for the middle class, and now we're adding 10% to those numbers. If you want America to endure as a sovereign, independent nation, go out and vote Republican. And if you want high-paying jobs, rising wages, and a booming economy, then go out and vote Republican.
Meanwhile, at a separate event over in Las Vegas, former President Obama had some choice words about the successes of the Trump economy. Watch this.
We got the economy growing again. We started the longest streak of job creation on record. We covered another 20 million people on health insurance. We brought housing back. So by the time I left office, wages were rising, uninsurance rate was falling, poverty was falling, and that's what I handed off to the next guy. So when you hear all this talk about economic miracles right now, remember who started it.
Remember who started it. Eric, your reaction.
Yeah, so tax cuts have really been enacted under this administration. It really looks like we're really getting a nice bump from that. I don't know if we're going to see these next tax cuts enacted coming through, these ones that are in the next couple of weeks. But keep in mind, too, we don't want to go too far too fast and set the Fed on a frenzy to raise rates. We want to keep a moderate kind of approach as we move forward.
So are you expecting the Fed to raise in December then?
Absolutely.
You are.
Yeah.
So James, Dagan, jump in here on President Obama's commentary there. I know, James, the regulatory area is something that's real impactful and important to you because under President Obama, the Federal Registry was a lot higher than it is today in terms of red tape and regulations.
Yeah, he was really the all-time record holder when it comes to churning out new paperwork from Washington, new regulations, new proposed rules, new final rules. That really changed under President Trump. And what also changed, as we've talked about, is the pace of economic growth, big ramping up. So I think, as Dagan suggested, this is kind of the ultimate compliment that President Obama, former President Obama, is paying to Mr. Trump to seek ownership of this economy. I would add, along with the slow growth, the slowest recovery since World War II under President Obama, we also saw that rough doubling of federal debt. And what did we get for it? It wasn't to win World War II or something like that. It was a very slow growth economy.
We got an economy that never grew even at a 3% rate in any calendar year that President Obama was in office, not even at 3%. So even if we get a slowdown in the current quarter, in the third quarter, the initial report's out on Friday, it's still expected to be above 3% for the quarter. It was above 4% for the second quarter. So again, I was waiting for President Obama to say, "You didn't bill that."
You know, it's funny because there's so much criticism from the left about President Trump, and not one Democrat voted for the tax cut plan, and of course they were not going to roll back regulations, and there's all this criticism, and yet when things are going well, then there's ownership there. So you can't have it both ways.
Exactly.
Thank you very much. All right, Eric Aanes, it's good to see you. You want to give us the final word here?
Look for a little bit of a rally after the midterms in December and a strong finish to the year.
Regardless of who wins in the midterms, rally after the midterms?
I still think we're going to see a rally.
All right, Eric Aanes joining us there.